Hello again, everyone. This is Joe Henches with Beyond the Chart, your source for exceptional video analysis of stocks, ETFs, and indices so you can become a better trader. Welcome back. Today is Saturday, August 22nd, and this is the weekend edition. We're going to take a look at, in extreme detail, the indices, the market action that we've had over the last couple of days and for the week. We're going to take a look at China. We're going to take a look at our indicators, our ETFs, our key ETFs, our sector ETFs. 4 stocks today: Apple, Netflix, SolarCity, and Valero, all big movers. Of the 59 stocks I had on my screen, SolarCity was the big mover of the day percentage-wise. All right, let's start off here with the Dow Industrials, and then we're going to talk a lot here. All right, so the Dow was down 530 points on Friday, following the big 400 and some point drop on, I think it was 400 points on Thursday. I know it was big. So what, 348? Down here, yeah. Well, it's 300 and something, I guess it was. 348 plus 90, so plus 10, so 358, and then we're down 530. So really got whacked. It just broke right on open. So the interesting thing with the wave count I've got in here, you see a lot of 1-2s. Okay, so let me pull something up here. Okay, so here's what I think's going on until the market tells me something different. I think you were here at, I think, the top up here on wave 5, and I think this is the top of the bull market. I really honestly do. And so right now, I think we are in a wave 1, okay? Okay, in what I call a minor wave 1. We'll see. And so you need 5 waves for minor wave 1. And let me get rid of that for a minute. And so right now, I think we got this first minute wave 1 down, and then we got a minute wave 2 down. But then, you know, the wave structure kept overlapping as it worked its way down. But I believe, especially as I looked at hourly charts, that these were 5 waves in here in this sequence. Like in here, 1 and a 2, a strong 3, 4 pullback, and a 5th. And then we got this. And so we keep working our way down. So the thing is, we're in a third wave. We're in a third wave that started here, a third of this minute, but we haven't gotten the third to complete of these yet. So I think I'm looking for the third bracketed number 3, let's call it. So you keep getting minute, sub-minute, you know, you just keep breaking down the count in terms of the wave structure. But so what I'm looking for is a 3, then we're going to get a little short-term sideways 4, and then we're going to get a 5th that's going to complete the third of this one, okay? So you're going to end up having 5 little eyes. You end up having 1, 2, 3, 4, 5, and then you're going to end up having 5 of the bracketed little eyes that break down, and you'll end up having 5 of these that'll play out. And I'm telling you, you know, as this starts to break down, that's why I think we are going to keep doing a little bit of, you know, breakdown. And this kind of dynamic move is exactly what happens in a wave 3. Wave 3 moves are the strongest of the moves. Now, so could this stop right in here and bounce a little bit and do something like that, and pause for a few days or something? Absolutely. Could this gap open and continue breaking down? Absolutely. That's why you got to play defense, you know, unless you're sitting with, you know, all puts and everything. I mean, but you've got to play defense, and plus you've got to decide, you know, on your plan and everything. So let's just talk about that's what I think's going on here. Let me go back to my pointer. Let's take a look at the S&P 500. Now, here's the S&P 500. Now, I didn't have this head and shoulders, this neckline drawn in here, and I didn't paint head and shoulders on the S&P 500. I did it on the New York Composite, but the same exact scenario playing out. Look at this big top, okay, S&P 500. And Brandt, what's his first name? I can't remember. Anyway, I'll show you in a minute when I show you some tweets. He was talking about the top in the S&P 500. He was looking for a close below 2030. Well, actually, the close on Thursday was below the neckline, and I think qualified. Now, the other thing is I'm going to show you some tweets of what I did on Thursday So if you're not following me on Twitter, you need to follow me on Twitter at Joe Henches. I know that a lot of you are probably working during the day, etc. You're not able to follow the market, but it will be good information for you if you can check in and just see what's going on, or if you're following it, it kind of gives you a little bit of an update. But the key thing is I was looking for is 2040 to 2045, these dotted lines, is that going to hold? And it didn't. And I had my doubts because the Dow had already broken down through this, and so had the Russell 2000. And so once it did this on Thursday, this was not a good sign. And then the next potential support was going to be down here, where these previous lows had occurred and previous buying came in. And that's the 1970 to 1980. And I actually called it 1972 to 1980. And so let me show you a sequence, and then we'll come back to this chart. So here's where this is on Thursday, and I don't need it blown up, but this is on Thursday. Okay, so you can see the time. It was 5 minutes before the market opened. This is Central Time, 8:30 on Thursday. I said 2045 support zone is the next test for the bears. We hadn't hit that yet. And then I talked about on CyberArk software. I said it's moving sideways and watch for it to break down. I really thought it was going to do that, and it did. Gilead, I was watching this. Of course, this is one of our trade ideas. We had puts on this, and this had broken this trend line. I talked about it. Took out 3-day lows. This is a chart as it's happening, daily chart, real time, and you can see it was 9:02 a.m. Market had been open for 32 minutes. IBB, I said 3358 support will be absolutely critical. We'll look at that later in the video. It smashed it. I said that at 9:05. So I don't have a ton that I tweet and say every day, but on Thursday I was very active. The VIX, when it broke this high up in here and I saw this action, I said breaking above the July 27th and August 12th peaks, this could really spike here. And I said that we ended up Friday up in here, and we'll take a look at that at 28, I believe. New York Composite breaking down through the neckline. We'll see how the day closes. Well, you'll see how this continued to smash and actually broke through the December lows. And that was at 9:25 a.m. Market had been open for 55 minutes. Peter Brandt, that's who I'm talking about. I had retweeted where he talked about 2030 was critical on the S&P 500. Peter Brandt's a great commodity trader. I've read his book. He had a great book out. And he uses charts extensively and exclusively to make his buying decisions. Boeing, I saw this sideways consolidation, and Boeing broke down, and I said breaking down out of consolidation. It moved, and this looked like a head and shoulders consolidation. I didn't call it that at the time, but that's exactly what it looked like to me. So Chris Kimball, Kimball Charting, he puts out a lot of good information, and we talked about how he talked about, and I retweeted this, how Amazon and Netflix at the top of channels. And he said not a good sign if they're reversing here, because it looks like there's a lot to drop. And then the Dow with the Dow and the New York Composite breaking below December lows, I doubt the 7280 area on the S&P is going to hold. This was on when was that? I think that was on Friday. I said that on Friday, and I don't have the time on that one. And then the last one I'll mention here was I talked about Apple at this point. Let's take a look at the chart. Apple was at 108.24, and my comment was getting close to my minimum expected move of 106.5 on this head and shoulders. And I got derided and several negative comments on Twitter when I talked about the fact back here that this looked like a head and shoulders top to me. And it doesn't matter, because, I'm going to call it like I see it. And I've been doing this for a long, long time. And that's what I think this was. And that's what it's playing out to be. So that's how the Twitter comments have gone over the last couple of days. Let's get back into the charts. And let's look at the NASDAQ. The NASDAQ, this is a broadening top. This is, and this broadening top was confirmed with the breakdown of this broadening top was confirmed with this break on Thursday, this close, in my opinion, and it just got more solidified with the move on Friday. Now, does this mean it's going to continue going like this? It could, but most likely it's going to chop, and it could pull back. It could pull all the way back up into here. I mean, there's, things go up and they go down, but what this, in my mind, is confirming that the NASDAQ has topped out up on this, with this topping formation right in here. New York Composite. Here's the breakdown of the New York Composite we talked about. Look how it's broken below the December. Actually, that's the November. No, is that? I've got this blown up quite a bit. That is the December low. So it's smashed down through the December low. I'll tell you, the next target, there's no support until we at least get to the October low down in here. And from a head and shoulders perspective, the New York Composite, the minimum expected move on this pattern is down here around 10,000 on the New York Composite. Russell 2000. No strong picture here except for the fact that it's breaking down and that it did not. It was the New York Composite and the Dow that took out the December low. So the Russell hasn't gotten quite that negative yet. All right, let's look at the weekly charts real quick. All right, the Dow picture. Again, I think we are at the top. I think we're at the end of the final fifth major wave. Fifth of a fifth of a fifth, honestly. And you can see this on the weekly chart, and we're breaking trend lines, and this is coming down very, very hard. Now this trend line here, this is a channel line. This is a top channel line from way, 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 way back. I mean, this is a multi-decade kind of a huge bull market from 1932 wave, that channel line that we're talking about, that we did a little bit of overlap, and now we're coming back down. So this is rounding over, it's breaking down, and now this, you just don't know. And I think that's why a lot of folks were a little nervous on Friday. You could sense it in some of the interviews and things I just happened to see, especially guys on the floor and stuff like that. Guys who have been around, they're like going, start talking about 1987 and things like that. They realize you got to play defense because things can get out of control very quickly. I mean, it just doesn't take. All it takes is people stepping back and a lack of bids for things to fall. It can do it very, very fast. S&P 500, same kind of rolling over action on the weekly chart. The NASDAQ breaking the trend line, also the upward trend line on the NASDAQ. And again, it had been one of the stronger ones, but this trend line of the last 6.5 years is breaking. Let's go to the New York Composite. Okay, New York Composite Weekly, same thing. And I know I've got this big retracement here. I am not going to talk about that right now. I am going to create another video, hopefully this weekend, where I'm going to talk about the longer term perspective as to where I think we are and what's going on, the longer view. And try to get that out, but if not this weekend, sometime this week. And but this is really breaking down here on the New York Composite on the weekly, same type of scenario. And so where's the lowest? Where are we closing? We actually closed on a weekly basis below the October close. Okay, 10,250, and we closed at 10,195. In here. So we have now closed at the lowest close since February 7th, 2014 on the New York Composite. And this is a broad measure. I think it's like 22,000 or 2,500 stocks or something like that in that composite index. Now, if we go back to the Dow weekly, did it close below the, I'm just looking to see, 16,380 now? So we didn't quite do it on the Dow, but we did it on the New York Composite. Okay, so I want to move to China real quick. And where are we? I'm looking for, let me pause. Okay, so here's why again, another reason why people were uptight on Friday is because the Shanghai Composite collapsed back down again on Thursday, Friday, their last 2 days in here, okay? And there had been, like Bloomberg, I had talked about it on Wednesday. Bloomberg was talking about an article. I think I had a link to the Bloomberg article where they were talking about how everybody was saying 3,500 was the critical. I wasn't quite so sure that 3,500 was the critical line, but the buying had actually come in. The lows was 35.37, the low 35.49, the low 35.58, and here we close on Friday below all that. So everybody was talking about, oh, it looks like government support's coming in, government support's coming in, government support's coming in. Not. Okay, so, now this formation to me looks like a swing move down. We'll see if we get continuation. We're right at the 233-day moving average. So, the key thing is this low point, does it hold, does it break, down through here. Right now, it looks like the momentum is coming on down. And so that, you got the Shanghai, and then you've got the Shenzhen, which is more like the NASDAQ for them. A little more of a negative picture, I think a little bit clearer of the negative picture. And then you got Hong Kong, which with the Hang Seng, if I can find it fairly quickly, is the most negative. Okay, look how this is completely broken down. And this initial crash low in here before it started to rally, it has taken that out. And it is down back to, May 2014. This is pulling one of those kind of things like the New York Composite showing us on our stock market now in terms of price levels back to, early spring 2014. All right, let's take a look at the indicators and see what's going on. Short-term trend. Yeah, there it is. Okay, we had a big day on the trend, 2.87 high swings. We got really, really negative. Our 10 days creeping up to the top here, and a lot of times it takes multiple days in here of these readings to get a bottom. We'll see what happens. And, I talked about on the VIX, the CBOE, it's right on it. Always knows where I want to go. All right, so I talked about how we broke in here, and I showed you that tweet I did when it was right about here, and then look what it did. So now you look at this and you say, well, wow, over the last year, that looks pretty extreme, doesn't it? And you say, well, it is pretty extreme, until you start to realize how extreme it can get. Well, that's just 2011, okay? There's 2008. So now, granted, it got very, very extreme in 2008. But, when you look at this and go, okay, now is there any guarantee it's going to keep? No, there's no guarantees in anything. But I'm just trying to put that in perspective to say, yeah, in correlation to for this year, so far this year, yeah, we just got an extreme. We just blew out and got an extreme. But we didn't even take out the October extreme reading on it yet. Okay, but it can get even more extreme. And the next one we'll take a look at is the high-low. Hopefully I got this up. Yeah, there we go. All right, this is really interesting. So the high-low got really extreme real quick in here. And we're down in definitely oversold on the high-low. Look at that, 631. The interesting thing about this is that there were zero, according to the New York, the Wall Street Journal, the reading that I got, the information, there were zero new highs, zero. And when I went back and looked, since 2007 data I looked at real quick, I did not see in other instances. There was a lot of times where there's one, but there was never where we had zero. Okay, so I thought, wow, that's really telling it all right there. Let's take a look at the. I pulled up the new lows just for. I thought I had it. Maybe here we go. Just to show the new lows. Okay, so 631. Well, that's the net because what I just showed you on the high low because there's zero new highs. But can this get even worse? Just like on the VIX. Oh yes, it can. So the new lows. This is 2011 and 2008 and 2009. It got even worse in terms of the number of new lows that get hit. This is back in here, almost everything was hitting new lows. So again, got to keep it in perspective, but big move, and we are short-term oversold, but that doesn't mean you can't get even more oversold. Which kind of brings me back. I want to go back to something. I think that's it. Oh, McClellan oscillator. Let's take a look at that. And again, what's interesting about the McClellan oscillator, we did get oversold. And we did break down below the previous readings where we always got bounces, right? Oh, you got to buy, got to bounce. You know, it's going to come back, got to bounce. Well, kind of didn't do it on Friday. Now, we'll see. We are oversold short term. There's no doubt, okay? And if I go back to the Dow, what I want to look at is the RSI. Now, look how low the RSI has gotten, 17.3, okay? Just like when it gets extreme readings above 80 kind of thing, and extreme readings down here, it gets below 20, it almost confirms that that's the move, okay? Because the move and the momentum is so strong in that direction. And that's why when you get an extreme reading when it's bullish like that, you have to be extremely careful about don't automatically shorting it. And just like here, you don't automatically buy it just because of extreme, because it's at extreme, it can keep going. Put to call ratio is at like 0.72 or something. Let me pull it up real quick. 0.77 is the 10 days. So yeah, it's been rising, but it's still not at an extreme. Okay, I'm going to walk you through the ETFs here real quick. And just to give, it's just to more give a perspective as to what's going on. High yield is basically confirming the move down. I mean, it's just, it's in sync with what's going on in the market. TLT, 20-year Treasury, it is continuing to tell us that, and I've taken the number count off down here because it doesn't really, to me, it doesn't really matter right now. All that matters is this thing is trending higher. It's broken this downtrend. It's got above this resistance. So interest rates are going lower. I don't care what the Fed's doing. Long-term interest rates still keep pushing lower. Why? Because the global economy is a mess. And let's take a look at the Dow and the dollar. I know it's probably got it on here. Sometimes I just stare at my list and I just can't see it. All right, the dollar's dropping, so the dollar is heading south here, and it's been chopping sideways, been kind of weak as I've talked about for months now. And the next one is oil, U.S. oil, and U.S. oil continues to push down. Oil keeps going down. It briefly flirted with it being in the 30s and 39. I'm not sure how it closed. Doggone it. I thought I wrote it down. Oh, I think it closed 40.24 on the futures. And let's see, GLD, gold shares. Okay, so this is rallying, and I'm not quite sure now what's going on with this. I mean, this is why I had this perspective. I'm convinced that in the downward trend that was going on, this longer term downward trend, this is a wave 4 triangle. Triangles almost always occur in terms of Elliott wave patterns in the fourth wave. Okay, so when you see a big triangle like this, you're like, okay, that's the fourth wave. The real question is, what's going on with the fifth wave down? I mean, we continue to go lower. Are we doing some kind of wedge type of fifth wave? That's the only thing I could think of. And we are getting, this looks like a 5-3, I don't know, maybe a 5-3 again. And then, down in here, I've got to look at this really, really closer. The bottom line is, if this is 2, we got 1, 2, this shouldn't be going above 1. Well, it has. So that means this is not 4. So somehow this counts off a little bit. So I'll have to revisit it. The bottom line is it's doing counter trendish. It's rallying, but the 55-day is still down. Short-term trends trying to come up, but the medium and longer-term trends are still down. We'll see where this goes and how it holds, but right now we're getting a fairly strong little counter trend, which, probably a little bit of this flight to safety kind of action is going on. Let's take a look at the semiconductors. I'll find that here in a minute. Okay, so here's SMH, semiconductors, continuing to smash down. Now, we are getting an extreme. We're outside the Keltner channels. We can keep riding down when we're outside the Keltner channels, but we are at an extreme, and we may be getting 5 waves here. I mean, when you look at this, this looks like 1, 2, well, possibly a 3, 4. Actually, I think the 3 may be ending here and getting this 4th and then the 5th wave down. But either way, it clearly has broken down out of this topping thing. It's coming down quickly, and it's rapidly approaching the October low. So you talk about something that got pretty negative very quickly since June 1st. Okay, so can things turn around very quickly? Absolutely. And home builders, they're kind of saying, the economy's fine. We're building new homes, whatever. Whoops. Okay, we'll pull back, and we'll see what happens to these guys, and see how strong. I mean, right now the trend, is still up. They haven't rolled over yet, but they may be starting. And then the next one, XLF, the financials, which I've been always, kind of watching and wondering about. Should be leading down. Well, all of a sudden, they did this pattern just like the NASDAQ, this broadening top, and it just got confirmed with Friday's action, breaking this low. 1, 2, 3, 4, 5 on this broadening top, megaphone, whatever you want to call it. I call it a broadening top. And this breaks down like this. That's pretty negative. And it got pretty negative very quickly. And again, the high here was on July 22nd. So you see where it's come from. Closed 25.58 and now 23.64 down. So I don't know, what is that, about 10%? I haven't done the math on it, but longer term, let's take a look at it. Now it's not nearly, if you go back to the October lows, it's not nearly like semiconductors yet. So it's, semiconductors are definitely leading down in terms of the ETFs. Well, of course, XLE, which we'll show about in a minute, is definitely, like a leader to the downside. But take a look at biotech. And I talked about this on my tweet. 358 was the support I identified. Thursday it closed below it, smashed right through it, got continuation down, tried to rally back up, and said nope, we're still heading south. And now still got a long way to go to catch up to the semiconductors, but it's definitely breaking down. And then of course XLE just keeps doing more of the same. Where are you? Popped up on me. Okay, XLE keeps doing more of the same. I talked about how it was a Chevron, or I think it was the long term from 1981-82 trend line had been broken, and that was last week or something. It just continued to break it. So it's very, very negative for what's going on in the energy sector. And just see where this is at. We're now closing at levels back into 2012, so not dramatically yet. We're not down here where the price of oil is, but it all depends on what stocks. Some stocks are below 2009 bottom. All right, that's it for the stocks. Let's take a look at Apple. And I started to show you that on the Twitter. Okay, so here's Apple, and here's the head and shoulders top I talked about. Now here's this fourth wave in here. So it'll be interesting to see, do we get support at 105? What is the low on this was 104.63. Do we get support in there or not? But the minimum expected move in here based on this top was 106.5. That got achieved on Friday. The next one is Netflix. We'll take a look at, and here we go with Netflix. I think we completed a fifth wave, and I think we did the fifth within this fifth intermediate wave. I think we're at a top up here. You can see the channel it was in clearly by, I did this line parallel to that, come back over here to 3 and draw this up here. You clearly, even being parallel, it hit these 2 points. So it looked to me like a solid trend line that this got up and just floated along the top up here. A lot of times it'll overlap the top part of a channel like that, and then now it's breaking down, and it did it pretty quickly over the last 2 days. So it's like this is not exempt from the market action. Although sometimes you would start to think that it is. Now, why did I draw this little line? I drew this little line because that's the close of that gap. All right, it started to do it, almost got it, but basically on Friday it closed that gap. So we'll see what happens. We may chop, may come down a little further down into this area in here, where if I had to draw a potential support, I'd say 95 actually would be my estimate on Netflix. All right, and the next one is Let's see. Let's take a look at Valero. And Valero, I was watching for a play. I really wanted to get in, but then it to the south, because we had some negative, really negative divergence in here on and everything. And then this channel and all the indicators were showing the negative divergence. But then when it just gapped on down and it broke like this, it's like, oh, it's like, okay, so now I'm just gonna have to wait to see if something else sets up. It looks like it's breaking, got a channel. Fairly, 45-degree angle type channel up here. I do think that we've probably got a fifth wave in. You can see it a little clearer when you step back. A lot of times on charts, sometimes, go to a weekly, zoom out of that thing, step back about 3 feet from the screen, and just, do you see anything? Do you tell anything? Because sometimes, sometimes you just get in too close and you can't see the forest for the trees. So, but when I look at this, I mean, this looks to me like, you got 1, 2, 3, 4, and a fifth wave. I mean, just intuitively looking at the wave structure. And the fact that this was a sharp pullback, this was a little more choppy sideways in here, might have actually been right from here and done an A, B, C kind of thing. And then we got a fifth wave. Now we're breaking down. So that would be what I'm thinking. But right now, what I'm looking for is watching to see if it sets up for something to get in to buy puts on. And the last one we'll take a look at is SolarCity, which was the big percentage loser that I had on my screen here. And so, wow, SolarCity is just getting smashed. And it just was back up here on August 5th. And it came down, consolidated in here, and then broke down the last 2 days. And really, really big on Friday. And then, of course, the volume got really, really huge with this sell-off. Well, what was the news? Okay, the news didn't really matter because really, what really matters is the stock's going down. Supply is overwhelming demand. Okay, more people are dumping the shares and nobody's stepping up to buy it. Okay, the stock is going down, and the news, as far as I could tell, is I remember seeing something about one of the big short sellers was talking about why he was short SolarCity, and was talking about why he felt it was a negative model that they had or whatever. And so you had a bunch of people, it seemed like to me, panicking and selling here on SolarCity. Now, SolarCity has been in corrective mode for quite a while. I mean, look at this chop since this peak back in February 2014, the end of February. It's been chopping. Now, I really thought we were going to try to get our legs underneath us somewhere in here, but it just didn't happen. And it hasn't broken out of this trend line, and now it looks like it's heading further south. Now, we'll just have to watch the wave count and see, watch the price action to see, does it get support, does it start to turn? You've heard that, and I saw it printed by several people on the last couple of days, is don't try to catch a falling knife. And that's the exact analogy of what I'd leave you with is, it's just a little dangerous trying to catch a falling knife. All right, that's the market wrap for this weekend. I hope you felt that was helpful, and I will be back with Trade Ideas video tomorrow, and then be back on Monday. And just as a reminder for everybody, I am moving to a paid membership site. Going to be keeping keeping it very low, very attractive. But in order to give this kind of information in detail out into the future, you're going to need to join and become a member. And it's not, believe me, it's not going to break your bank. So I appreciate you stopping by, and I hope everyone has a great weekend. Talk to you soon.